Hi everybody, Jared Johnson here at Day Traders FX. I wanted to give you guys a quick video update about a 15-minute trade we have setting up. So for those that have the scanner, you can see this right here on your scanner chart. For those that just have the 15-minute trade, you'll be able to see that right here on your 15-minute chart as well. What we have going on right now is a trade on the dollar yen. So USDJPY. You can see our bar count here on the 15-minute charts, a little over 300, and our pip count's pretty good, about 33 pips. So pip and bar count are crucial. So let's go over here to the dollar yen chart. This is kind of where the majority of our 15-minute activity is happening. Is just on that dollar yen. We have a couple others that are looking good, a bunch of 100 pluses and 160s and 120s and so on. So those are still a few, you can see here on the scanner, it'll tell us how far out those are. Those are, 70 hours out and 50 and 60 hours out and so on. So this one right here is pretty close to our ideal 400 bar count. Remember, this is not a signal service. This is just to show you guys the setups that we have to help you identify them and help you trade them. I do have signal services. I do have trade groups where I give specific entries, specific exits, and so on. This is the group to help you guys identify those that have bought the 15-minute trade course and the scanner trade course to identify these setups and kind of see how they work and so on. So here is our dollar yen. You can see that the distance between price and the moving average is pretty far in that 1 hour chart, about 80 pips. If we go back here, we haven't seen a ton of 80, more than 80 pip distances in a while. So we're about 80 pips right there. Now, something important to kind of keep in mind is for the dollar yen to make a move, we typically need the stock market to kind of dip a little bit. Now, this is just a little bit of kind of side information here. The stock market's not quite dipping just yet. If we look at this setup right here, this is the S&P, this is SPY, which is an ETF that tracks the S&P or the US stock market, where it's going. So we need this to kind of come down a bit to have that dollar yen come down a bit. But right now, we have seen some dips. And again, we're always looking for that space. We have a pretty good bar count actually on the S&P here. And we have pretty good distance between price and the 200 moving average. But it's coming up. It's having a little bit of a bullish day. We had a couple of sell-off days with a few bullish days in there. And we're kind of in the process of a little bit of a bullish day. This is the 1 hour chart. So we need this to kind of come down more to really ignite that dollar yen trade. Now, the technicals always tend to kind of line up. So we just have to be a little bit patient with this. But as I look at this right here and I say, okay, this has got some room to kind of dip lower. I'd like to see it get below about 368 right here on SPY, just the low of that big red candle. If it can get below that, I think we're going to have some big yen movements. So as we go back over here to the dollar yen will probably continue to push a little bit higher. Remember, we only have about a 325-ish or so bar count on dollar yen. So we're not all the way to that 400 that we like to see. But remember, we're looking for bar counts, and we'll take bar count trades at lower counts if we have a big distance between price and the moving average. And I would say that we're kind of in that big distance territory. Here's our bar count, about 300. Now the distance is, as we saw, just about kind of the mid 30s, right? A little over 30 pips between price and moving average. So that's pretty good. But as we looked at, the stock market needs to dip. When stock market weakness happens, that's pretty much the only time that yen strength happens. And this move down is going to be yen strength. It's going to be that kind of movement. The yen will strengthen against the dollar and everything will be good, right? So we need a little bit of stock market cooperation on the dollar yen. Yen pairs are a little tougher to trade in this strategy sometimes. So I just like to be a little bit careful. But here's kind of what I'm looking at and what I think we might see a little bit of. Here's two things we can do. Number one, we can kind of just look at this channel, this rising channel. We've got a pretty good rising channel right here on dollar yen on 15-minute chart. So it's kind of in this area here. So what I won't be surprised to see is some of this and some of this and maybe even some of that and then some of this, right? Now remember, what do we want to see when we have bar counts setting up, we want to make sure that we have good bar counts, right? We want to make sure distance between price and moving average is good. We want to make sure we have support or resistance to trade against, right? And then we want to make sure we have good targets. And these are going to be missed pivots and that kind of stuff. So as we look at this right here and we say, okay, do we have what we want to see? We've got a bar count that's looking pretty good. We have distance between price and the 200 moving average that's looking pretty good. And then we have these missed targets down here. Barely a missed daily pivot, but then we have the missed weekly and monthly pivot, right? So that's our weekly pivot, and that's our monthly pivot. So we have some really good lower targets. So the higher this goes, and the further it gets away from the moving average, and the higher that bar count gets, the better this trade becomes. Now, we have all these things in line here. The one that we haven't really talked about is support or resistance. What does our resistance look like up above? Everything else looks great. Bar count's looking good, and it's just continuing to increase. Distance is great. Targets are great. How's our support and resistance situation? So we want to look at this and say, okay, let's go to a larger time frame, and we'll just kind of get rid of some of that stuff there a little bit. Larger time frame, 4-hour chart, even a daily chart, which I typically like to look at. Do we have any major resistance, right? Do we have any major upper levels? Now, on something like this, yen pairs, as I've said in the past, yen pairs, you got to be careful. You just got to be careful with yen pairs because they can really move and they can really run. So with yen pairs, we want to be a little careful, and by careful I mean we're just going to find the most ideal setup, meaning the highest bar count and the most pips away, and then we'll probably use a stop loss on this one, right? So this is currently sitting at just about 10500. It looks like we've got a bit of a zone up here, if I had to kind of say it like that. We've got a bit of a zone kind of in this where that moving average is, and there we go. Where that moving average is and kind of, consolidation. You can see it all the way through here. Consolidation, consolidation, consolidation. Then we have the moving average. So probably hitting that 200 moving average on the daily chart is going to be a good area. So I'm going to be watching for, if I'm going to sell a high, I'm going to be watching for probably about 105.40, 50. 105.40, 50 area to start selling this. Because we see, some consolidation. It's really actually, a pretty good sized consolidation zone. It kind of goes from the low 105s to the low 106s is really where it is. But let's use kind of this recent high and this 200 moving average as kind of an area that we say, okay, bar count's high, pip distance is high. Let's start looking for an opportunity to sell it there. So I'm looking at kind of the mid 105s, 105.50-ish. Now what we don't want to do is we don't want to miss this trade, right? So we want to be, somewhat aggressive about it, but we don't want to, where did my text go? Because I want to make sure we've got that here. We don't want to miss the trade. So if we look over here on the 15-minute chart, I don't know why I can't see my text, but I'm trying to move this around here. So what we want to do here is, let's try this one more time. Oh my goodness. Okay, I'll fix that and I'll post the chart. But we've got to make sure that support and resistance is good. The more distance we have between the 50 and, which is this black line, the 50 moving average and price, that's also good as well. But, on a 15-minute chart, we start seeing 40, 45, 50 pips between price and the current moving average. That's a big deal, and that's stuff that we want to keep a real close eye on. Right now, it is 35 pips. We start seeing that over 40 pips, and I'm going to start looking for a small position to put on there. Now, as we looked at that daily chart, we saw some of those bigger levels looked like, they were kind of 105.50, 106, in there. So it, depending on what the entry is, if we get in somewhere in the mid 105s, I'm going to give this like a 50 to 75 pips stop loss, somewhere in there. I'm going to put it up above 106 if I get in the mid 105s. Because that's really where it needs to be. So just think about that. We need, if you want to play with a stop loss, that's where it needs to be, somewhere in the low 10600s. I like to usually kind of scale in, start with a small position, and then add a slightly larger position if the trade gets drawn down about 50 pips. That's typically my way of operating for this. Targets, I think our minimum target in this case should be the weekly pivot here. I think we can get down to this weekly pivot. I'm going to call it 104.50 to kind of split the difference between the daily and the weekly. We got the monthly down there as well, but let's just say 104.50 is our weekly, or excuse me, is our target for this. Now, once the trade is in profit, a good little chunk, we want to make sure to protect that profit. But I like entering a sell trade kind of in the 105.50, and then again at 106 with a second position, and then having a stop somewhere in the mid to low 106s, right? So if we end up with a 105.50 and a 106 sell, I'd probably have a stop loss at 106.50, right? That way we really minimize our risk. So our first position is always our smallest, and then our next position is just slightly larger, and we're looking for a rundown into kind of that 104.50, 104.40 to 104.60, and I kind of just split the difference and said, let's call it 104.50. Okay, I hope that's helpful. Just a little idea of kind of what we have going on with the dollar yen, some of the background, how the strategy works, what we're looking for. I hope that's helpful. Thanks a bunch, everybody. Good luck on everything, and happy trading.